Wow, what a day for the Indian market. But the big question on everyone's mind is, where do we go from here? Today we're going to break down the Nifty 50 and the Bank Nifty to see what might be next. We'll look at the charts, the news, and we'll even get some help from FinTickAI to see what the data is telling us. So let's get right into it.
All right, before we jump into the analysis, we've got to cover the important stuff. Investment in the securities market is subject to market risks, so please read all related documents carefully before investing. And just a reminder, everything we discuss here is for educational and informational purposes only. It is not intended to be investment advice.
So yeah, that really is the million-dollar question, isn't it? After a monster session like we saw on February 9th, you have to ask, was that just a flash in the pan, or are the bulls actually taking charge for real? Let's dig into the data and see what clues we can find.
Okay, so first things first. Before we can figure out where we might be going, we need to know exactly where we stand. So let's take a quick look at how things wrapped up on February 9th to set the stage.
Let's start with the big one, the Nifty 50. It closed out the day strong at 25,867. That's a solid 0.7% gain. You know, that's a really positive sign. It shows that buyers were active right up until the very end.
And you know who was steering the ship? The banks. Bank Nifty also had a great day, closing around 60,669. And this is so important, right? Because financials are kind of like the engine of the whole market. When they're running hot, it's usually a fantastic sign for the broader economy.
But you know, the headline numbers only tell part of the story. The real drama was happening under the surface. I mean, SBI was the undisputed star, just rocketing to a new record high on the back of some incredible earnings. But here's what's interesting. HDFC Bank, another giant, was kind of lagging behind. This might be what traders call rotation, money flowing out of one winner and into the next. And it wasn't just the big boys. We saw mid and small caps joining the party, which is exactly what you want to see in a healthy rally.
All right, time to get our hands dirty and look at the charts. Yeah, let's geek out a little bit, because the price action itself tells a fascinating story. So what are the key battlegrounds traders are watching for the Nifty 50? Let's break it down.
So for the Nifty, the battle lines are pretty clear. Imagine a tug-of-war, right? On one side, you've got the buyers, and they're digging their heels in right around that 25,750 to 25,800 zone. That's what we call support. It's where they've stepped in before to stop the price from falling. But on the other side of the rope, you've got the sellers, and they're putting up a wall of resistance between 25,900 and that big 26,000 mark. That's the ceiling they need to break through.
Okay, so that's the Nifty. Now let's switch gears to the Bank Nifty. The whole story here is centered around one giant psychological number, 60,000. Let's see how that fits into the puzzle.
So for Bank Nifty, that zone between 60,000 and 60,200, that's the absolute key battleground. It's the pivot point. The market's next big move could honestly be decided right here. If it slips below 59,800, that's a major red flag. But if it can punch through 60,800 with conviction, man, that could really open the floodgates for a massive run higher.
But you and I both know it's never just about lines on a chart, is it? Markets are driven by people, by stories, by emotion. So let's look at the headlines that are actually fueling all this optimism.
Well, for one, we already mentioned SBI's blockbuster profits, which just cast this positive glow over the whole banking sector. Then you have this growing buzz about a potential India-US trade deal. I mean, think about it. Lower tariffs, more exports, that's huge for confidence. And like we saw, this wasn't just a one-trick pony. We saw strength in PSU banks and metals. It was broad. So yeah, the news is definitely giving the bulls some wind in their sails.
Okay, so we've looked at the charts, we've looked at the news, but now for the really cool part. We're going to bring in the big guns. Let's see what FinTickAI's analysis says. It's chewed through all the data, and it's ready to give us its probability forecast.
All right, so here's the verdict for the Nifty 50. The AI is giving it a 47% chance that this bullish trend keeps going. That's the highest probability, which is good news for the bulls. But, and this is a big but, look at that 36% chance of things just going sideways. That's a pretty big number. So what this tells me is, yeah, the outlook is leaning positive, but it's definitely not a slam dunk. We need to stay on our toes.
Now, when we look at Bank Nifty, things get even more interesting. The AI is actually a bit more optimistic here, giving it a 51% chance of an uptrend. So why the extra confidence? Well, it probably has a lot to do with that incredible strength we've seen from banks like SBI, plus the fact that it's holding strong above those critical levels we talked about. It's got a slightly better report card right now.
Okay, that's a lot of information I know. So let's boil it all down. What does this actually mean for you? Let's talk about the specific price levels, the triggers that we need to watch. These are the lines in the sand that will tell us who's really in control, the bulls or the bears.
All right, let's get right to it. The bottom line. For the Nifty, if it can break and hold above that massive 26,000 level, that's your green light. On the other hand, if it drops below 25,500, that's the danger zone. For Bank Nifty, the go signal is a push above 60,500, and the warning sign, a drop below 59,800. These are the numbers to watch. Simple as that.
So that really brings us full circle, back to that one huge question. The AI gives the bulls a slight edge. The news seems to be on their side. We know exactly what levels to watch, but the question remains, does the Nifty have enough juice in the tank to finally smash through that 26,000 ceiling?
Well, only time's going to tell, right? We'll definitely be watching to see how it all unfolds. And hey, just before we sign off, one last important reminder. Investment in the securities market is subject to market risks. Read all related documents carefully before investing. Remember, this was all for educational purposes, not investment advice. Thanks so much for tuning in.